Welcome to Save U.S. Taxes Legally. The Spendthrift Trust is legal. It's in the IRS Tax Code 643B. So few people have ever heard of this. This is why I do a weekly meeting here on LinkedIn. And I want to teach this to as many U.S. business owners, U.S. entrepreneurs, U.S. franchise owners, U.S. professionals. I don't care if you're a chiropractor, a dentist, a doctor, tradespeople. Maybe you're a plumber, electrician, a mechanic, or you are a 1099 income earner. With the business trust, you'll stop paying federal and state income taxes year after year. With the beneficial trust, it's for all investors. You'll stop paying taxes on any profits year after year. It's an amazing document. So let's get this started. In the chat, I want you to write yes or no on the following three questions. Question number one, do you want to stop paying taxes year after year and leave a legacy? If it's yes, put yes in the chat. If it's no, put no. Excellent. Question number two, do you want all lawsuits to become frivolous and go away? If that's yes, put it in the chat. If it's no, put it in the chat. Think about it. How much time, anxiety, worry, and money just goes out the door when you're sued? Do you realize 40%, according to Google, 40% of LLCs, S Corps, and C Corps get sued every year? That's playing Russian roulette with your information. So again, all lawsuits go away. Number three, what if I told you that no one will know what you own, where you own it, how much you own, what you do with it, and how much you sell it for? This is what the Spendthrift Trust can do with you. So let's share my documents. Give me 1 second. So the Spendthrift Trust saves you federal and state income taxes, keeps your information completely private, and no judgments if you're sued. Now this is the 2026 federal income taxes. So few people know about taxes because it's a taboo subject, death and taxes. There are 4 ways to file your taxes. Singles, most expensive way. Head of household, you're divorced and have children 18 or younger in your household. Then there's married, filing separately. And then the cheapest way to file your taxes is married, filing jointly. Now look at this. On January 1st of 2025, the IRS changed married filing separately to match single all the way up to the 35% tax bracket. If you're married, file jointly. So check this out. If you're filing single, it's $256,226. And being married, it's double that amount, $512,451. Again, it doesn't matter if you have the business trust, the beneficial trust, or any other trust. You just need to know this. If your CPA has not told you this, shame on them. Now, if your financial advisor, your CPA, or somebody else says, ooh, the IRS wrote a memo about this. They did. It's the IRS opinion letter dated August 9th of 2023. The IRS literally says they do not like tax code 643B. They do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. Sounds like a Dr. Seuss book. Well, that's okay. The IRS can write as many memos as they want. They can't change the tax code. Only Congress can. And too many presidents, too many senators, too many Congress people, and the people in their super PACs, those groups that pay them all the money to run for them, know about the secret of the rich. My goal is to teach it to the regular people. So let's go over these 5 elements. Irrevocable. This means it goes from generation to generation to generation. The Rockefellers Spendthrift Trust is called The Office. It's 7 generations old and has over 400 people under the same EIN or employment identification number. Each individual family files a separate 1041 tax return, and the money is not commingled. Complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to century. The Benson Financial Trust has inherited a trust that's going to turn 365 years old in 2026. Our country only just turned 250 years old, and our tax structure went into effect February of 1913 and has only grown since then. Super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys made sure they could save money. Well, if they can save money, we can save money. Um, Now, just to let you know, 97% of the trusts sold in the United States are the family trust or the living trust. My mom and dad had one. Susie Orman talks about it on PBS television. There's nothing wrong with the family trust. It's designed to avoid probate and then it dissolves and goes away. This is not your mom and dad's trust that we're talking about. Discretionary. Whoever is a trustee or trustees gets to make the rules for all the beneficiaries. There's no infighting. There's no contesting the will. If I decide I want to leave only $10 to one niece and leave 90% of my holdings to one nephew, nobody could do anything about that. Again, it's my decision and to do whatever I want. Non-Grantor. This makes the trust completely private. When you start the trust, you're going to have someone who will never be a beneficiary, who will never be a trustee, sign up to be the grantor or the settlor of the trust. Then they sign themselves away with another document. I think you sign your name 5 times per trust. It's no big deal. I used a family friend, Roy, who knew me before I was born. He knew I was a real estate investor. He knew the reason I was starting the trust, but he had no idea where my real estate was. He signed up and signed away on both my business and beneficial spendthrift trust. And then finally, spendthrift. This comes from England way back when King Henry VIII, that famous king who chopped off his wives' heads, started the Church of England. He went to go tax the lords and ladies of England, and they went back to the 12th century of the Magna Carta and its contract law that came from England to the United States with the trust that's turning 365 years old this year. Now, my personal story. I became a real estate investor in late 2018 when my mom and dad drove from Goodyear, Arizona, 25 miles west of Phoenix, to Charlotte for my oldest nephew's wedding. They were supposed to be gone for 2 weeks. Thursday before the wedding, my dad calls me. I'm still in Phoenix working as a Medicare broker, worst job in the world. My dad calls me to say my mom's in the emergency room. He does not know what's wrong. Don't change your flight. I did a red eye Friday night, flew in on Saturday morning, 7:20 in the morning. The wedding was going to be at 3 o'clock in the afternoon. My dad, the groom, and his younger brother met me at the church, met me at the airport. We went out to breakfast at IHOP, family tradition. The boys went back to the house. I went to the hospital with my dad and walked in on the priest giving my mom last rites. I knew she was sick, but I didn't know she was that sick. So I purposely bought this property, bank-owned reverse mortgage, in July of 2020 for $20,000 because my mom was in Pineville Hospital. I knew my history, so I can give you the whole history. I became a real estate investor in 2018. In 2019, I wholesaled 7 bank-owned properties nationwide, paid off all my debt, and I supposedly was a rock star in my real estate group. Everything I was doing got shut down because of COVID, and on April 4th, 2020, my CPA called me to say congratulations. I had made so much money, my tax bracket went from 22% single all the way up to 24%, and all of a sudden I owed $94,000 in taxes. I don't know about y'all, but my family loves me, but they don't have $44,000 laying around. A wonderful book to read is The Power of Your Subconscious Mind by Joseph Murphy. I went to bed crying on April 4th, and on April 5th, I woke up and I knew I was going to take a HELOC off my paid off townhouse. My girlfriend's boyfriend did HELOCs, and I had read an article about the Rockefellers Spendthrift Trust. It took me 5 months to get this started, and I started my trust in September of 2020. So I bought this property in July of 2020. I knew at 24% tax bracket that $20,000 to $50,000, that $30,000 spread in between at 24% tax bracket would cost me $7,200. Well, it didn't go to auction for 13 months because of COVID. When it finally went to auction on August 28th of 2021, the final bid was $64,326. Without lifting a hammer, I made $44,326. I'll never have to pay back. And more importantly, at 24% tax bracket, I saved $10,368. What I did with that money, I put into more real estate. Now, The business trust is for anyone who makes 1099 income. I'm sorry, W-2 income earners, I cannot help you. When you get your paycheck, your taxes are taken out before you get your paycheck on Fridays. Google says 35% of W-2 income earners do have a side hustle. That was me. In 2019, I was working as a Medicare broker, W-2 income, and I was wholesaling bank-owned properties, capital gains. So this is an actual client of mine. I met him at a BNI meeting. He is a franchisee owner. He files single. He's at 24% tax bracket. And with federal income taxes for the full year, $37,681. North Carolina state income taxes are 3.99%. So again, North Carolina state income taxes, $7,495. For the full year of 2026, he would save $45,176. He didn't start this trust until May of 2026. So in May, he saved $3,764. In June, he saved $3,764. In July, he saved $3,764. In August, he saved $3,764. He's going to continue to save that in September, October, November, and December. The money he saves, he can put back into his Made in the Shade. He can pay off his mortgage. He can buy a new vehicle. He can take his entire family on vacation. He can give to his favorite charity, or he can save for retirement. It's his money to do with what he wants. Now, the beneficial trust is for all investors. This chart shows the 7 different tax brackets and the different ways you can save taxes at $50,000 and at $100,000, no matter what you're doing investing. Short-term capital gains are when you wholesale, fix and flip, do auction houses, tax liens, sell crypto, options trader, or you do Forex investing. Interest income taxes, again, it's between 10% to 37%, and then 22% because this is make more than 100,000 to 37%. Interest income taxes, 10% to 37%. If you're a passive investor, you're in mutual funds, you're in a REIT, you're doing subject to real estate, the BRRRR strategy. I have notes where I'm the paper on the house. I'm Bank of Sally, people pay me their mortgage. Creative financing, seller financing, or Forex investors. Forex investors get double tax. Dividend income taxes, again, between 10% to 37%. If you are in the stock market, you're a day trader, you're a futures trader, you're a commodities trader, or you're living on dividends. Rental income taxes. Yes, you can move a property with a depreciation schedule into the trust. Yes, you can move a property with cost averaging into the trust. When you sell that property, you'll never have to pay back the depreciation that you saved on that property. So if you have short-term rentals like Airbnb, vacation rentals, 3, 5, 10, 15, 20, 100 doors, maybe you're in multifamily real estate, apartment real estate, you're in commercial real estate, or you're doing Airbnb arbitrage or a whole bunch of different real estate, doesn't matter. The two that are not on here are long-term capital gains. I'll get to a slide. And then also royalty income taxes. 7 different layers, but between 10% to 35%. If you are an actor, an actress, a musician, an author, you are an artist, NFTs, copyrights, patents, or intellectual property. Robin Williams, the great comedian and actor, yes, he committed suicide, but he had the Beneficial Spendthrift Trust, and his 3 adult children pay no royalties on all his great works. Now, I'm not trying to crow, but this is the wholesale deal I did. I bought the tax lien for $7,000. I was taught how to call the real estate agent who sold this, very, very rural Vermont. The real estate agent sold a property a year before. She knew exactly what house we were talking about. She knew the kitchen was a 1950s kitchen, was never updated. And she says to me right on the phone, she goes, what if I paid you $100,000 for the house in the 6 acres? I'm like, okay. She turned it into an Airbnb. It's a half an hour from skiing. With this, I made $93,000 at 24% tax bracket. I saved $22,320. Going back here, on this one, I saved $10,368. On this one, another $22,320. So I got to save over $33,000 in 1 year in taxes. Helps a lot. Now, Forex investors. This is kind of a fun one because I did a presentation. Let me get me out of here. I did a presentation 2 weeks before Thanksgiving, and this is somebody who got on my meeting. He's young. He was only 24 years old. He's making $45,000 a year, and he made $36,000 in his first year of Forex investing. He's going to continue working. He promised me for at least 6 months. So it drops his tax rate from 22% down to 12%, saving him at $7,705. And Nebraska state income taxes of $1,872. At 22% for capital gains, $7,920. Interest income taxes, $7,920. So when you add that all together, savings and going from 12% down to 12%. Nebraska state income taxes, no longer paying that. And then saving the capital and interest income taxes. For a full year, he's saving $27,289. He's going to continue working for at least another year because he does want his health insurance benefits. And then he's going to continue Forex investing. This is a husband and wife who are in Virginia. The husband is doing options trading. They don't buy the stock, they're doing different spreads. She's going to continue working as a teacher, making $65,000 as a W-2 job. With him making, I think it was $100,000, I forget how much it was, at $180,000, sorry, $180,000 in capital gains, he gets to save $43,200. In Virginia state income taxes, $10,350. His wife's tax bracket drops from 24% down to 12%, saving an additional $36,692. For the full year, they're going to save $90,242 because of the husband's options trading. And per month, $7,520. Just different ways to save money. Now, this is long-term capital gains. This husband and wife bought this apartment building in 2012 for $1.5 million. They put some upgrades, they put a laundry room and other things into it, and they sold it in April of 2024 for $5 million. On April 5th of 2025 at 15%, they got to save $570,000 in long-term capital gains, or at 20%, $7,060,000 in long-term capital gains. I'm not a CPA. When you start the trust, we introduce you to a vetted CPA. It's your choice if you use the CPA we have vetted or your own CPA. But again, long-term capital gains, I just give both numbers because I don't know. Now, one of the things I do want to talk about is IRMA, Income-Related Adjustable Amount. If you're over 65 and you're on Medicare, the supercomputers every October go back 2 years. They look at 1040 tax returns and add everything together. How much you're getting from Social Security? Do you have a pension? Are you working? Did you have a 401k withdrawal? An IRA, a SEP IRA withdrawal? You have capital gains, interest income taxes, dividend income taxes, rental income taxes, or royalty income taxes. They add it all together. For 2026, if you're single, divorced, or married filing separately, it's $109,000 level. If you're making more than that, you're paying the premium IRMA on Parts B and D of Medicare. If you're married and it's $218,000 or more, you'll pay the premiums. I don't have this chart yet. This is a 2025 chart. Again, they're looking at 2023 tax returns. But one of my clients, a husband and wife, I'm saving them $72,000 in dividend income taxes. I knew he was 70, she was 68. And she said that both of them were paying over $600 a piece per month for Medicare. Now, I only could get them down to $185 each, so saving an additional $1,000 a month in just IRMA surcharges. Now, I went over this quickly. I'm going to just say if you want to set up a 30-minute tax breakthrough session with me, it's www.thetrustisyou.com/scheduling. I have a free class on the Great Discovery. When you go out to SallyGimmon.com, it's going to take you to the Great Discovery. You're going to register as a free learner, and the class is called Save U.S. Taxes Legally. There you're going to get a presentation, 3 articles from Forbes magazine I did not write, 2 pages of case law so you can research this to your heart's content, and examples of clients saving thousands and thousands of dollars. Now let me get back over here. I want to say thank you for coming to save U.S. taxes legally. I'm going to stop the recording and then I'm going to answer questions. So give me 1 second. Thank you for your patience.